All right, hey everyone. Mark here. Thanks for joining me for another Greenbridge Investing market analysis. Hold on, let me just adjust my mic. Cool. Hey DJ, good to see you. Andre, thanks for stopping by. I don't expect it to be a very busy day here today because it's generally a quiet market. People are away, no problem. So, you know, it gives us I can focus more on answering questions and stuff like that. If you're new to the chat, please share your question about your stock or your market that you'd like me to take a look at. I see we have a couple of questions here in the chat. That's cool. If it's an altcoin or something, just put USD after it so I know and I don't look at the wrong symbol for 3 hours. All right, so with that being said, let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, the goal of these streams is to gather clues so that we can have realistic expectations as the week changes, okay, as information changes on our charts. So we get a better sense of reward risk and what's realistic in terms of market structure, okay? It's funny, I watch a lot of YouTube videos of these up and coming gurus and this and that. It's really funny because a lot of the ones that I watch are more of like educational ones because I'm very curious to see what they're teaching. And all these guys are teaching the same thing, which is interesting. You know, they're all teaching reactive behavior. They're all teaching this focus on particular oscillators and a moving average and all this other stuff. And man, let me tell you, no wonder why everyone is behind. All right, you can't listen to that stuff, especially when these people, none of them have any real credibility, to be honest with you. You know, I'm looking at them like, so who is this guy? They don't use their real names. They've never worked in this space. You know, they've never had like a professional. They don't have a professional background in this space. They're just someone that learned how to read charts somewhat, and now they're just trying to market the little knowledge they have. It's unbelievable. Anyway, all right, the point of that, the reason why I'm bringing that up is because I think it really helps to explain a lot of the confusion that's out there. You know, this confusion has been out there all along. It's just being amplified. And that that makes things much harder in this environment if you're new. Okay, so I just wanted to make that point real quick. So a way to improve is stop watching that stuff. When you're inexperienced, you don't know how to filter out what's actually of value and what's not. So just don't watch it, okay? What you should be doing is you should be spending more time with your chart. And again, like I talk about, charts are not perfect. They have limitations. You need to understand what they are to really get the most out of them, right? I always talk about that. I want to make sure people are very clear that, you know, all these oscillators and all these candlestick ideas and this and that and blah, 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 it's good for a point of reference. But we still, no matter what, we cannot see what's going on inside of a candle. So by relying on what we see, we're behind. We need to look ahead. All right, so that brings me to Bitcoin. Let's talk about this Bitcoin situation. I want to talk about Bitcoin. I want to talk about the stock market real quick. And then I want to take a quick look at gold. And of course, I want to answer your questions. So Bitcoin, right? Again, people react to what they see, what's obvious, okay? Whether it's on a 5-minute chart or a daily chart, they still react to what they see. Now, oops, sorry, I didn't mean to do that. People that are looking at something like this, okay, if they're looking at their smaller time frames or this and that, whatever, they're going to react. They're going to see a bearish candle and probably go short or start calling for shorts and all that other stuff. And I have to say at least one thing. If you're going to do something like that, at least it makes sense at this area. We don't short Bitcoin. I have to be very clear on that. We still don't. You are at a resistance area. Now, the other thing is people need to understand that context, which is what's going on around you, plays a very big role in how to weight I like to use the word weight, as in like something that's heavy or something that's light. Weight. How to weight this information. How much weight does it carry? Okay. So when we zoom out here, we see that the bigger picture is bullish on Bitcoin. That has not changed. That has not changed at all for months and months and months, even though people have been saying Bitcoin bearish, blah, 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 right? Okay, forget those people. Now, so that's one thing. The other thing is, though, since the 64K peak, we've been in this consolidation, which I had talked about a long time before the consolidation. Now the question is, are we breaking out of the consolidation? Is this thing still in a consolidation? If you ask a fake guru, they will tell you, oh, no, we're in a bullish trend now. But this is not a bullish trend. This is just a test of the range high. That's the context. So while the bigger picture is bullish, and there's a chance that we break out of this range high because the bigger picture can reassert itself, then that's one scenario to keep in mind, a very important scenario. So that is bad for the shorts, okay? So does that mean you shouldn't short this here if you're an aggressive trader, or if you want to take a day trade or that kind of thing? Well, no, especially if it's a day trade, it's always worth a try, okay? That's a very small time frame. You have to understand your reward risk on such a time frame. Most people, they haven't been doing this, they haven't been like investing or trading for more than like a year. If that's you, if you've been doing this less than a year, do not day trade, because you cannot win. You have to have a lot of experience to understand how information changes and how to adjust to it. More importantly, forget the charts, forget the information, how to manage your risk, okay, and how to keep risk tightly controlled as a day trader. That has nothing to do with charts. All right, but if you watch any of these gurus, again, they focus on the chart and, oh yeah, just put the stop here, buy this candle. Yeah, that's your risk management. Okay, that's part of it, but there's a lot more to it than that. So that comes with experience. So forget day trading if you're relatively new. Now, as far as a swing trade goes, again, you could measure your risk from these candles up here. But like I said, if that bigger picture asserts itself, and anything is possible here, then you may see a push up toward that 50K area. That is a possibility over the next few days if we don't get a sharp retrace. Now, this market is very reluctant right now. It's very slow, and it's giving you a bearish inside bar. So it is a setup to go short if you take that low, if you take the break of the low. That is a potential sell signal, right? And if you were going to do something like that, again, I'm just giving you an example. If you were going to do something like that, a reasonable exit would be like the midpoint of the range, around 35K, 36K, something like that. And you're going to have to risk half of that or something like that, which is highly likely to get stopped out. If this market doesn't really pull back and you get like a very tight couple of little bearish candles, right? Couple maybe like inside bar followed by a pin bar and develops into a higher low somewhere in this area, then it's probably going to break higher from there. So what I'm telling you here is watch for that. Like I said, we come up with the scenarios ahead of time. So if the market delivers one, we have an idea of what to expect, what it should look like, and how to prepare for that, right? So if we see the higher low, I'm all for a new long. All right, we had our longs from the 30K area. A lot of people had a hard time with that, and I think one may have stopped out. It was a tough spot, but generally, though, that support held. So now I'm looking for higher lows, right? The broader trend is bullish, so it would make sense to find a higher low. Those are the two arguments. So, like for us, like I said, I want to see that pullback. I want to see the long. The short is very, very aggressive. And by the way, what goes on here with Bitcoin is going to affect all the junk altcoins, right? So, I mean, we could take a look at like something like Litecoin, right? It's going to look the same. Looks basically the same. Not exactly, but basically. So people that are still confused about this idea that these things trade on their own, most of them don't. You get a couple that do, but most of them don't. So you have to go with the average. You have to go what most of them do. So use Bitcoin as your guide. Okay, so that's my Bitcoin situation. So basically, I'm looking for longs at this point still. A new potential long if we can get that pullback. And that's it. Let's take a look at the stock market real quick. All right, now, the stock market has been very tough because of what feels artificial. Now, again, like I said earlier in the week, my opinion means nothing to the eyes of the market, right? Market doesn't care if I think if it's artificial, if you know these are too risky levels. Market doesn't care, and that's fine. But here's what we have to look at here. So we have an inside bar, which was developed yesterday after the FOMC meeting, right? The candle closed, and today it's trying to take out the inside bar high. That's a long signal. That's another long signal, you know, after we had this attempt at a sell-off again. Now, the question is, how far can this go? It keeps pushing all-time highs. Andrew was talking about 15.4, 15.7. Anything is possible, and that's the attitude you have to have here. While I think I don't think it's very likely, but anything can happen. I mean, I've been pretty much cautious since we broke 14,000. I've been like, I'm staying away from this thing. And here we are messing around 15,000. So can it go to 15.7? Anything is possible. In this situation, when you see the chart that looks like this would be a gauge for the stock market. So if you have a long idea, or you have a long signal that goes off. Now keep in mind, I'm specifically talking about swing trades here. I'm not talking about investments, right? That's a completely different mindset and a completely different way to manage risk. Investing up in these areas, I think, is really extremely risky because you're investing near all-time highs. Unless, of course, you're taking small bites, because at some point we're going to see that pullback. When all this artificial nonsense is over, markets just don't keep going higher and higher and higher forever. At some point comes a pullback. We don't even have a minor pullback. That's my complaint with the market, is these red candles, those don't even count. Those are very minor, right? Back here, you know, from where that March peak to that April pullback, whatever that was a little bit more in line with what's normal. But even then, that was kind of tight. Okay, so what's normal in this situation? I say we can pull back to this old, what is this here? 14K. 14K is old resistance, likely to act as a new support. That's a normal, healthy support level, if we can get there. So that's a place to be looking for swing trades, all right, where reward risk makes a lot more sense and probability is more in your favor at such a level. These levels are highly random and highly risky, because at any point, some negative catalyst can enter the market, and next thing you know, NASDAQ is minus 500 points in a day. How can this be? It never pulls back. They always buy it back up, right? But there's some catalyst or whatever, right? Same with Bitcoin. Bitcoin, what were people saying at 30K? I made this point yesterday. What were people saying at 30K when Bitcoin was testing 30K, testing 29K, testing 28.5? There was a lot of talk, right? A lot of talk. Grayscale they're going to have an unlock period, and they're going to dump all this Bitcoin on the market, and you're going to see 20K. Oh, yeah, it's going there. Oh, yeah, some expert said that. Oh, some guy in CNBC said that. Yeah, right? Not one person said Amazon is going to come out in the next few weeks, and they're going to announce that they're going to be taking Bitcoin for their purchases or whatever. No one said that. No one saw it coming, but it comes out of nowhere, okay? So what could have helped you be prepared for that is forget the news. It was the level. The level was saying that the risk was extremely high for shorts. Same level here. Extremely high for longs, the risk. So that's what I'm talking about there. So I want a level that gives me better reward risk and better probability, and that level is 1,000 points lower. So that's why I'm not chasing into this. I've been very quiet with the stocks. I really don't want much to do with them. Now, we sent out a trade of the week earlier today. By the time I got it out, the stupid thing had gapped up. TRMB, Trimble. Look at this thing. So 85.75 is where it closed. It opened at 84.80, right? But by the time I had sent this out, it was actually at 85.25 by the time the email actually went out. So the buy price was at 85. Look at this thing. It's ridiculous. But that's a breakout. Okay, so that's what I mean in this environment. Can you take something like this? Sure, you can give it a try, but if the next candle tomorrow or next week is a big red one like that, then it's likely to fail, right? And you may be able to get out earlier for a smaller loss. That's what you should be concerned with more than the profit targets in these situations, okay? Which goes back to preserving capital. All right, cool. So that's that part, the NASDAQ, and pretty much the S&P is in the same boat. All right, now let me just show the S&P real quick. I'm not going to rant about it for 3 hours because the NASDAQ and the S&P are pretty much the same deal. It's the same thing, right? There's a buy signal in here too. But just because there's a buy signal doesn't mean we're going to get a big move higher. Don't be lured by all this optimism and all this hype and all this other happiness, whatever you want to call it, at such risky levels. A turn can come out of nowhere, and often it's something unexpected. Okay, and then everyone's caught and everyone bangs it out at the same time. Don't be in that situation. The way to avoid that is, number one, don't react to what you see and don't feel safe by what you hear. All right, anything that's coming out of news outlets or anything like that is all information that's not helpful. All right, as much control or as much logic and comfort as it gives you, it's not helpful for timing markets on the short term. Okay, I don't care what they say. I don't listen to anyone or anything. Just price. And price isn't always perfect, but it's always right. And when I'm wrong, I have to adjust. That's the best I can do. All right, so that's the NASDAQ and the S&P. Let's take a look at gold. So gold is like one of those opinion situations. We talked about this yesterday as a potential long. I didn't have the chance to send this out, okay? But we talked about this as a long when we were talking about potential trade of the week. Look at this thing. What a close today, right? Up 23 points. I even said this thing can run 20 points in a day pretty easily. Now it's on its way. You can't chase gold now. All right, you're going to have all the breakout traders. They're going to buy it now on this breakout, which, okay, fine. You want to give that a try, but you're taking a lot of risk. So the long signal was the break of yesterday's high, which occurred overnight, I believe there. So now the risk is much higher. Nothing you can do here. I mean, we've been in gold. How's Wheaton Precious Metals doing? Nice gap there. Okay, that's nice. Look at AG, right, on silver. Look at this. AG stopped us out at 14. Now it's trying to get its game back together here. But I wouldn't touch this thing yet. Let it pull back. Let it give you a higher low. But gold is doing what you would think it should do, right, in an inflationary environment, which is basically, right, the Fed said nothing. They just waste everyone's time. I don't know why the Fed even bothers. They should just, like, you know, write a letter and just mail the letter and have someone else read it. I mean, they just waste everyone's time with their press conference. So look at the bonds, right? Here's the bond market, the bond futures. Now, the bonds, if you go by all this day-to-day price action, it can kind of drive you crazy. So here's what you have to do with the bonds. All right? You have to look at a one-week chart because really this gives you much better perspective for something that moves so slow. Now look at this thing. Generally, the bonds, they look strong, right? I mean, the price is generally a bullish trend on the bonds, okay? Higher lows, higher highs, all over the place, right? Except for the recent price action. So this means, right, rates have been lower and lower and lower, but now, and rates had risen earlier this year, as we can see, because again, rates are inverse to this, interest rates. And now look where we are. This is a tricky spot. Is this a higher low or is it a lower high? At this point, it's uncertain, right? We can argue both ways. So this needs to make a decisive move. Where is that going to come from? The Fed. The Fed has to say something or do something that gives this thing a decisive move one way or the other. The general trend is bullish, we can argue, but if this turns into a lower high, then we're looking at rising rates, right? Which is possible. So the thing is, we can't sit here and try to outguess the Fed or second guess the Fed or try to use logic and say, well, the Fed has to do this because they have to do that. The Fed just does whatever. In fact, they're probably more politically motivated than anything else, I believe. So who knows what they're going to do, right? Don't beat your head against the wall trying to figure that out. Look at the chart and let the chart decide. The chart will know because smart money is usually all over the bonds. They're going to know before everyone else, and you'll start to see the signs earlier here. I mean, on the weeklies here, we have a bearish pin bar from the week before, which hasn't been taken out. The low hasn't been taken out yet, but watch for that. A rising rate environment is not exactly bullish for, you know, everything around it, like the stock market and stuff like that. So just something to keep in mind. That could be a catalyst for a more dramatic pullback in the coming weeks. All right, so I just wanted to show you that to give you some perspective. You can't really trade on this. It's too slow for stuff like that. And you don't want to get caught up in opinions and stuff like that. All right, so let's go back to the daily chart. And let me get to your questions now, because those are pretty much the things I wanted to cover. Because you know, wherever the bond goes, the bonds, it's going to affect the dollar. And the dollar is going to have an effect on everything else, right? So that's why we're seeing stronger gold. Where's the dollar index? Whoa, getting beat up today, right? Is that surprising to us? Shouldn't be. So that's, and it was, of course, the euro is much higher, the pound is much higher, and it looks like this looks like the inflationary situation we're facing. But that doesn't mean it will continue, right? All the Fed has to do is come out and say, oh yeah, we're going to raise rates. I know we didn't say we were going to, but we changed our mind, right? That's all I need to say. And this thing will reverse in 2 seconds. So just something to keep in mind. Remember, what you see on the chart is not what you get. All right. So let's get to questions here. Again, I appreciate everyone sticking around for my portion of the analysis, and I hope you find it useful for your own decision making. All right, so DJ, hey, it's good to see you again, DJ. It's been a while. Cool. I have a few stocks. All right, ADVM, PSTI, looking to see if we do $100 and see where they go. All right, well, let's take a look. I mean, since we have a smaller crowd here today, I can do multiple symbols per question. Usually I ask one symbol per question, but you're DJ and you're a long-time follower, so okay, I'll let you get away with it today. ADVM, ooh, what's been going on here? I definitely don't like this chart. Now you're talking about being speculative and throwing a couple $100 in, see where it goes. These gaps are bad, okay? These big gaps on the charts, whether that's based on some specific news or something, there's no technical reason to get into these things, into this one. Maybe if there's a fundamental reason, there's something you like about it or whatever, you want to take, basically gamble on it. Okay, I could see why you would say that, but I don't see any technical reason to be getting into. I don't see any structural change. The more conservative thing to do would be to wait for a structural change, meaning you take out one of these highs, which would be here 367, that area right there. That would be your most recent lower high. If price can take that out, that means it's changing. So that would be a more conservative place to place a bet, even though it's not the best price on something like that. All right, so let's take a look. PSTI, what's their story? Okay, not as gappy, we can say. So here's the thing. I see the double bottom, right? So recent price action hasn't been very favorable, right? Lower highs, lower lows. After a pretty exciting move a year ago, or no, I'm sorry, a year ago, a little over a year ago. You had all that craziness, and now it's out of play, right? That's pretty much what this is. It's out of play. So for something like this, at least compared to ADVM, at least you have some kind of potential stability developing in the form of the double bottom. At least you have that, and on top of that, you have a bullish close today. All right, it hasn't closed yet. That's yesterday's close, actually. Today is just not much going on there. But it's coming off of a pin bar low. All right, if you're going to throw a couple $100 into that, at least you can make an argument for the structure. It's aggressive, though, because you're still facing lower highs, right? And it's made that lower low, although it could be a failed low based on that location. One thing to consider for something like this is perhaps you take instead of like a couple $100, let's say you just take half of that, right? And let's say instead of $200, you buy $100 worth, let's just say, and then when it breaks the structure, that's when you put in the second 100, right? When it breaks this over here, that lower high, and starts to prove that it wants to go somewhere, which is around 379, then perhaps that would be a good justification to add to that instead of putting it all in near that low, which it could make those lower lows. So at least if you buy $100 worth and it goes lower, you're not going to care too much. okay, compared to if you put in $200 worth or whatever. I'm just using that as an example. All right, so just one way to consider playing that kind of game. But the general chart structures are not they're not strong, at least. Okay, especially in light of the NASDAQ and S&P, which continue to flirt with their all-time highs. All right, but of course, these are what, biotech stocks or whatever they are, and they are not correlated. So usually a news event will turn them around, some kind of specific news, which can come out of nowhere. Now, DJ says he also has some Indian stocks. So let's take a look. Please type in the full name, TV. I will put a price on the side too. Okay, so RS, the full name. So let me see. I'm going to type in Indo, okay, AMINS. Is that right? Maybe that's the wrong thing to put in there. Let me see. Maybe I need to put that RS number in there. RS356. Let's see. Does that give me anything? RS. Hold on. Let me see if I get that symbol in there. RS356. I'm not getting anything for that. RS356. I'm not getting that, DJ. Do I have the right thing here? RS356. 356. Yeah, maybe you can give me another symbol or something. I'm not sure why I'm not getting anything for that. Okay, so anyway, here's another one. Okay, Bala J. I'm sorry, I just have a hard time reading. IAM. Okay, let's see. Do I have this one here? Bala Mines. How about, is this one it? Oh, here's one. Wait, Bala. This one looks close. Maybe this one's it, and it's on the. They're all on the Indian exchange here, right? No, this one is. Here, maybe this is the chart. So let's see. RS3198. It doesn't give me a number here, but all right. Let me see if I have the right price. Oh, those are rupees. RS means rupee. Okay, I'm sorry. I'm a little behind. It's Thursday. I'm behind. So let's see here. 3198. Is that the right price? It's at 3204 right now. Yeah, okay, this looks right, the correct one. So you're in from a 1200 area. I mean, so you want to know where to take profit on something like this? I mean, that's a good looking chart. So first of all, let's see, and this thing's around 3200 rupees or whatever. Hopefully you've taken something off the table by now. If not, you should definitely take something off the table because this thing's just making high after high after high, right? So you want to get out near highs. That's a nice thing. One thing you can do then for the rest of it, after locking in something, and in a situation like this, you have such a good price. I mean, it doesn't hurt to take 30 or 40% off. You're never going to get the top, as you know. And if you let greed affect you, you give back a lot more than you probably should in a lot of situations, right? You're never going to get the full move, so don't try to get the full move. In this situation, if you want to let this thing try to run further, after locking something in, then start looking at these swing lows over here, right? Like this one over here. What is that? 2754. So this area right here, price should stay above that if it's going to continue in this trend. I mean, that's the most recent high or low. So that would be a good spot to maybe raise a stop to, slightly lower than that. Or if you want to give it a little more room, you can use this one over here, 2494. So those would be your points of reference. Theoretically, what this thing should do is over the next few days or maybe over the next week, it should develop another high or low somewhere above 29.59. Theoretically, that's what it should do. So that's what you're looking for, okay? Otherwise, you can use those reference points on something like that one. All right, let me see what else we got here. Hold on, let me see. So ALK, all right, I'm going to try to type this one here. ALK, YLE, is that right? I think this is it right here. Okay. And 4290. Okay, let me see. Is that right? Closed at 4280. So this must be it. All right, they look like they're in a very similar situation, right? Same type of pullback. Now, something like this, with this type of chart, you know, again, it's the same deal. All you're looking for are support and resistance levels. This here is an old resistance, which should act as a support. So really, price needs to stay above 39.79 to continue. So that's a good point of reference. Again, with all these, hopefully you've taken something off the table. Now, what this thing should not do, if it's going to maintain this structure, is take out this low over here, 34.65, right? So that's really the best you could do with these things, is just work with the structure and wait until the structure changes, okay? Okay, cool. So let me see. And then what else you got here? Tidewater, all right? In from Fortuna and split on this stock. Okay, Tidewater. Let's see. Tidewater. All right. This must be it here. NSE. Okay. So, oh, split. Okay, so that explains this situation here, that big gap. All right, well, I'm not sure, you know, what that means. Like this chart, when there's a big gap in there like that, I mean, it throws the whole thing off for me. So I'm just going to go by, you have to go by what it would have been, right, based on this structure. Because what is this over here, right? It's not giving me the adjusted chart. Let me see. Is there a better chart here for this? Tidewater. Let me see. Okay, that's better. I think I could use this one. Tidewater oil. Maybe that's the same run, right? 32.89. Okay. In from 4,200-ish. Okay. And this thing, I'm not sure if I got the right one there. But anyway, if the chart looks similar to those other ones you mentioned, again, you just want to make sure you take something off the table and then look for those higher lows. The higher lows are your points of reference. They really should not be taking those out. Okay. I was thinking about selling out 30% each stock. Is 30% okay? No, you know what? 30% is fine. 30%, that's I think is reasonable. Maybe 40% because you're coming off those highs and you do have those red candles. Like if you had just green candles and they were on their highs and the thing was closing that way, then I'd say, well, you know, take something off the table and see how far it goes. But you do have some red candles, right? Like if we look at the other stock there, you do have some red candles. So they are trying to pull back a bit. So why not take a little more off the table? It never hurts to do that, right? I know some people say, oh no, you should let it run as much as blah blah blah, right? But what if this thing gives 50% back or more, right? And if you're greater than 2-to-1 or 3-to-1 reward risk, you should definitely take a good portion off. Okay, so there's nothing wrong with between 30 and 40%. So thanks for asking. Okay, Andre, please take a look at WKHS. All right, let's take a look. WKHS, workhorse. So, all right, EV, back to the EV stocks here. And here's the situation. These are mixed, okay? Because relative to where the stock market is, obviously they have no problem pulling back when the stock market pulls back. But when the stock market goes back to its highs, these things kind of struggle a bit. I don't like the relative weakness. I don't like it. So even though they're not as highly correlated, let's look at this from a technical perspective. You have the initial push here, right? The initial bullish, the newer bullish move. Took out these resistances back here. That's all good. And you have the higher low that developed over the previous week. You have this little mini double bottom area. Okay, that's decent, right? That's not bad. But the thing is this. I mean, look at this candle today. So it took out this previous little mini lower high. It took this out, which is a good sign. I mean, you can argue that this is a buy signal, okay? You can definitely argue that. What's your risk, though? So you have to look at these lows here, 10.56. So you figure your stop is going to go around 10 even, something like that. And the next question is, what is your reward? You also have this gap back here where it found that support. So that all makes sense, right? So if this thing closed here at, what is that? $11.88, almost $12. You're risking about $2 in this thing if you buy this the way it looks right now. Can you make $2 or more? I mean, really, you should be making more in such a move. What are the recent highs in this thing? 17.95, right, around 18. So you figure you're not going to get that. What's the middle? The middle's around 13, let's say around 14. So you're looking at about 1-to-1, maybe a little bit more than 1-to-1 if you can exit in this area right here. Okay, that's because you have to believe everyone else is going to have the same idea. people, especially people that are in a much lower prices, this is where the reward risk starts to be, the reward starts to be worth the risk that you took. Anything greater than that, great, but you can't bet on that, right? That's more of a random occurrence if it can make it that far. So if you're willing to take that risk, it's you have the higher low, and in theory it should go for the higher high. But what you have in front of you, though, right? One thing to consider is the stock market situation. Like I said, when the stock market pulls back, these things seem to have no problem being weak like everyone else, right? So they are acting relatively weak. You have to be careful with that. So I would say it's more aggressive for that reason. You have to be nimble. If it turns the wrong way, perhaps you don't have to lose $2 if you can get out earlier. Like, so for example, if you buy this thing right now, okay, it's still open. So let's just say, for example, you bought it right now. This is sort of it may close like this, looks like a sort of a bearish pin bar, but I wouldn't worry too much about that because the location is generally bullish. But let's say you buy it and tomorrow it goes back to like 1090 or 1080, right? It shouldn't do that, okay? Or it goes even lower over the next couple of days. Shouldn't do that. You shouldn't see a red candle. This little break should give you some momentum higher, right? You should see a green candle developing from here. So that's just something to keep in mind there with that situation. It might be better off to just wait to see if you can get the green candle tomorrow and it starts pushing, toward today's high, because you have a little room to play with there, right? That's how I would treat something like that. But I'm not a big fan of these electric vehicle stocks right now in light of where the market is. Here's something FUV, okay? I mean, look at them. They're all trying to be stronger. This one has the little higher low in place. Looks like it's going to go for the breakout, right? How's NIO, another electric vehicle? I mean, a little pop off this support area, trying to give you the failed low. So they're all giving it a try, but I don't know. I always go back to this, and if this thing can't do it, the NASDAQ, if this thing gives you the 1,000-point pullback, where are those EV stocks going to go? Right, so just something to keep in mind there. One thing too is, if you like the idea and you want to get involved with it, that's fine. But don't put on too many. Don't buy like 5 stocks near these highs, because if the NASDAQ and S&P have a serious pullback and all your stocks turn red at the same time, you're likely to make an emotional decision, right? And that's what you need to avoid. So thank you for asking, Andre. EH seems to be in good location. EH? What is EH? Is this what you're talking about here? EH? I mean, it's similar, right? You have the little higher low potential situation here. A lot of these stocks, though, I don't know what they do. I don't know if this is another EV stock, but a lot of them are out of play. So how much is this? 25, 45? Okay. A lot of them are out of play in a time when they should be doing better, okay, relative to where the S&P is and where the NASDAQ is. I know they're not all highly correlated. So yes, the location, I agree with you. The location is good here. Your risk can be defined by these lows. I wouldn't go by this more recent low. That's too tight and you'll get stopped out very likely. But 2077, you figure around 20 half, 20 even is where you would define your risk on something like this. This thing right now is at 25.46, so you're looking at about 5 points of risk. You need to make at least 5 points to justify that, right? So at least you're not buying the high of the move. You can give it that. So like I said, there's going to be a few of these stocks that are in these positions. You have to decide if the risk is acceptable to you and take that chance, but you don't want to take too many of these, right? If you have 1 or 2, okay, fine. If you put on like 5 or 10 of them, and they all turn red, it's going to be painful, okay? So always keep an eye on the risk. But yeah, generally not bad locations. If the stock market was in a much more favorable location, I would be more optimistic and more excited about these rather than cautious. So thanks for asking about that. DJ, I can't watch these new gurus for more than 3 minutes. I always think, yeah, right. Well, DJ, he says that because I was talking about the fake gurus earlier. Yeah, they're usually looking at like 1 minute charts or 5 minute charts or 15-minute charts. I think they do that because there's a lot of action on those charts, and I mean that's how you make videos about those, and people want action. People want to know how to trade that 5-minute chart. I mean, if you're going to talk about daily charts, right? You can watch it. You watch, like, there's one guy I saw, and he was talking about, like you said, 1 minute charts, 5 minute charts. And there's another guy, an older guy, and he was talking about something a little different, and he was talking about longer time frames. Of course, the views were much big difference, big contrast in views. Obviously, you could see what people were more interested in. Anyway, yeah, it's funny. So the Ace and Sharky show bought into TRMB at 85.20. That's 20 cents more than suggested. Okay, hey Ace, that's, you know what? And I'm glad you mentioned that. Here, let's go back to TRMB. I'm glad you mentioned that, because sometimes when we send out that trade of the week, first of all, it's for educational purposes. So, you know, one thing is you have to make sure is you respect the stop. If the thing turns around and stops you out, that's the risk. You have to understand the risk, right? It's very important that you understand that. You're not going to get the perfect price. So even if you got 20 cents higher, that's not a big deal, okay? What you don't want to do is you don't want to buy it $1 higher, or something that's really out of line, because that really changes your reward risk dramatically. This thing still can reach 90, 95, whatever. So 20 cents is really not going to, it's not going to affect your reward risk that much, right? It's still going to be generally, it's going to be slightly less than 2 to 1, which is fine. So thanks for mentioning that. Sometimes you're not going to get the perfect prices, right? And I hope it works out. But just keep in mind, TRMB is a market stock, which I wrote that in the email. And if the market pulls back, you may see that red candle show up. You may see like something like that show up here, and that's where you will have an opportunity to make an adjustment if you have to. But that all depends. The chart's not going to tell you exactly how to do that. You'll see a red candle, and then you have to ask yourself, am I willing to take the risk? All right. If you get the red candle right here, let's say tomorrow or Monday, you get the red candle, went higher, and then it turns into a red candle, and the next day it takes out the low of that candle. At that point, you have to decide, am I willing to take the risk that this thing goes to the stop, or can I get out for a small loss or maybe break even and just avoid the risk altogether and see where this thing, you know, how far it pulls back because maybe the market's pulling back, that kind of thing. The mistake people make is they don't have that decision-making process. They don't have that process, right? They just, oh, I hope this thing doesn't stop out. That's not a process. So you need to be able to adjust quickly in those type of situations to prevent the larger loss. But if you don't know what to do, right, that's why we have a stop. And if it goes to the stop, you're losing $5. At least it cuts the stop. Now, the mistake not to make is don't remove that stop. We've had plenty of these things where it goes to the stop, stops you out, and if you had stayed in it, you would have lost a ton of money in some of these stocks, right? So respect the stops. Okay, anyway, so thanks for mentioning. Wedge, hey, Wedge, good to see you. I've been long Roku for a while. Would you comment on its current action? Okay, Roku, obviously a very big day trader stock, right? Now, I mean, relatively speaking, look at this thing. A few days ago, maybe like a week ago, it was like a $27 or $47 day. I mean, wow, talk about a big day for day traders if they were involved in this thing. Now it's pulling back a bit. Is this really harsh? Not relatively speaking, not really. This is actually very normal and very, very healthy. In fact, you have two inside bars, right? See these two inside bars? So that could turn into a bullish continuation pattern. It doesn't look that way right now, but the thing is, if this thing holds, right? If this thing can hold this support over here, what is that? 443. If it holds that and instead takes out the inside bar high of 471, you're likely to see a leg higher, okay? If it does something like that, you may see something like that. You know, and Roku is wild that way. But at the same time, oh, before I get into the bearish scenario, you also have this old resistance, new support area, which you're pulling into. So if anything, if I was involved in a day trade for something like this, I would definitely be looking for longs in this location, even though there's nothing on the daily chart. Of course, you can't take a day trade long from a daily chart. You have to look at a smaller time frame. I'm not here to talk about day trades, but my point is you're in an old resistance area, so you're likely to see some buying activity. Now, the bear argument is, why is this thing minus 18 points while the Nasdaq and S&P are, flirting with their all-time highs still. That's relative weakness, right? That could be a problem. Maybe they're, I don't know if they had their report, if they had reported their earnings yet or whatever. I don't know what their story is, but maybe there's some news on that. I don't know. But the thing is, if the Nasdaq pulls back and this thing takes out that what is that again? That 440 low. If it takes it out, you're looking at a deep pullback here. You're looking at, deep. Your next support is around 398 or around 400. So that's what you have to watch out for, okay? That's why you can't step in front of this. Like, someone may have heard me say, oh yeah, he said buy it, day trade, right, because it's at support. I'm going to buy it, right? And the next day it's at 400. Well, you can't buy this thing until there's confirmation. And a day trade is not the same as a swing trade. So it's very important that you have that clear. This right now at this moment, there's no reason to buy this thing, but you do have a decent location for smaller time frames. But like I said, the risk is extremely high. It's possible that you find support somewhere in here, okay, which is around, what is that, 438. So that's around 440, maybe lower, maybe 425, 430, something like that in this area right in here. It's possible that you find something in there, but there's a lot of risk, okay, holding on to this thing. So just something to keep in mind, especially in light of where the S&P and NASDAQ are. All right, everything looks all pretty now, right? Look, S&P, where's S&P closing? Look at this, all-time highs almost. Is today an all-time high? Let's see, what's the high? 44.29, and yesterday this high over here, 44.20. Yeah, right. Day before 44. Made all-time highs today. Yeah, market's gonna go up forever. Right. So and Roku is negative on a day like today. So that's a red flag. All right. So something to keep in mind. Thanks for asking about that. A lot of times, look, you can make arguments for both sides of the equation here, and it's not about predicting, like, so where do you think Roku's going to go? Is it going to go higher or lower? I don't know. The market needs to provide certain confirmations or certain clues to let us know how to manage our risk and what is likely to happen based on the way it's behaving now, or basically what it's not doing, right? So when I see this conflict, like S&P new highs and Roku is messing with the support, what will go on with that support if the S&P gives us a red candle, especially a dramatic red candle? Like a 50-point pullback on the S&P can be very dramatic. All right, it takes a lot of money to do that. So just something to keep in mind there. All right, let's see what else we got here. I know I'm going slow today, but I don't have billions of questions, so I can get away with this. Also, if you like the channel, by the way, if you want to press the like button, I think that helps me with the algorithm or whatever. I hear a lot of gurus say that. See, I'm acting like a fake guru now. Please press the like button so that it can help me with the YouTube algorithm. No, you don't have to. I'm just messing around. All right, let's see what else we got. I mean, it's not like these gurus that I watch. They have like hundreds or even thousands of people watching them. I can't even get 100 likes on here. Never mind people watching. So anyway, it's what happens when you don't tell people what they want to hear. Let's see what else we got. So hey Alice, good to see you. How are you? Can you look at Qualcomm? Sure. When to sell? All right. All our regulars. We got DJ in here. We got Alice in here. Oh, nice. Look at this. Look at this one. So this thing's up $8 today. That's an unusual move. They must have reported something. All right. Maybe they had a good earnings report or something. Wow. That may explain why the Nasdaq was fooling around, or the S&P fooling around on its highs. That's a pretty big move for a market stock. When to sell? Well, here's the thing, Alice. At this moment, there's nothing bearish about this candle. So if you're in this, I mean, hopefully you locked something in, right? You should definitely lock something in when something goes vertical like this, especially on a gap like that. You just take something off the table just to do it, just to have the good habit of doing that. But let's look back. And you have this gap from back here. See this gap back here? So that's likely to act as a resistance, and you're going right into it. So again, that's a good historical reason just to take something off the table. But at the same time, just because there's a potential resistance there doesn't mean it's guaranteed to turn. So you want to see if this thing can pay you more if it wants to. The next resistance would be back here, which is what? What price is this? 161.05, around there. So 161. So that's a potential area to maybe put like a limit order or a price target or something like that to see if it gets there. And that's it. That's all you could really do here. Those would be some levels to consider. There's no red candle. You don't have any bearish pin bar. You don't have an inside bar. You don't have anything. So it sounds like you have a nice winner on your hands there. I would just look at those levels, take something off. Again, always good habit. Just take something off and then see how much the market wants to pay you from there. Okay, and thanks for asking. What this thing should not do, by the way, is it should not give you a red candle, like a dramatic red candle, like the next day, giving this whole candle back. Should not do that. And closing this gap, that's if it were to do something like that, that is definitely a red flag, something you don't want to see. Okay, shouldn't close that gap with this kind of momentum and this kind of strength. Another thing it should not do is take out this low over here. Okay, which is what, 140.17. So those give you some other reference points to consider as far as if things are starting to turn the wrong way on you. Again, this is a market stock, so the S&P would probably have to have a really negative day for this thing to do something dramatic. All right, so it's something to keep in mind. So thanks for asking. Nice chart there. Okay. Indo Amin. Okay, let me go back to that, DJ. Indo Amin. This must be it. This must be it right here. Oh, look at this. Yeah, that must be it. This is just like ridiculous. This looks like an altcoin. This looks like the way Cardano used to look 3 months ago, right? Or 4 months ago, or whatever. So DJ, something like this, again, like we said before, take something off the table and let it run. Let it run until it gives you a real solid reason to sell. There's just nothing there. You have these pin bars, but they're not taking out any lows. So just let it do this ridiculous run. It wants to run like this in a ridiculous way. Let it run until it stops acting ridiculous, right? And then take as much as you can. When it starts taking out lows, right? Let's see if it develops a higher low, right? Or maybe over the next week, maybe it pulls back a bit, like some of those other charts we looked at, and maybe it gives you a higher low. Okay, let's say it gives you a higher low over here. You've locked some in, and now you're waiting to see if it gives you another leg higher. That higher low becomes your point of reference. So after that point, it shouldn't take that out, right? And if it does, then it could be range bound, it could be turning. Keep something in mind, just because the support is taken out, and I'm not just telling, I'm telling this for everyone that's listening, not just you. Just because the support is taken out doesn't mean that the trend is reversing, right? This isn't, markets aren't so simple. They're not binary like that. It could go into a range. So the change in structure just means that maybe the momentum is going from ridiculous, like it is now, to more of a consolidation, which will give you some choices. I mean, you could lock in some more profit. You can see if it breaks out at some point. Either way, you're going to be a strong hand. So, you know, that's what I'd look for in something like that. But nice chart. Hey, Julio from London. AMD. Oh, good question. He wants to know if it's still a good time to get into AMD. Oh man, this is ridiculous mode over here. 102. I would not go near AMD. Okay, so obviously whatever that's driving this thing, that's nice. If you weren't in from these lower prices, I know we had a swing trade on AMD. Andrew called it a while ago. All right, I forget what price he called it, but it was like here somewhere in this area, right? Maybe DJ knows because he keeps track of that stuff. But now you're buying the high, right? You're taking it off our hands and everyone else that bought it at much lower prices. This is a really bad place to be buying AMD. You know, again, you're looking at you look at the chart and you say, well, why? You know, how does this chart look bad? It looks good, right? But what you see is not what you get. We don't see all the people with all the sell orders that are hiding in this part of the candle. We can't see that. We can't see if there's a fund manager unloading tons of shares onto people and it's just not enough to absorb them all just yet. There's no way to see that, right? So all you can look at is the location. Look at this location. This is a highly, highly vulnerable location. You're coming off, you broke to all-time highs on this thing, right? You're inside this range where it can easily fake out. So my answer is yes, you've missed it. Let this thing pull back, okay? So the first thing you want to see is a support And your first support on this thing is here at $94. Okay, this thing closed at 102. So 94, and even those 90s could be tough. I mean, look at this consolidation back here. Look at all this. I remember we had some swing trades back here too. I remember getting stopped out of this thing, and you know, it went into the 70s or whatever, and now it is here. So I would stay away from this thing, especially in light of where the S&P and NASDAQ, because when they pull back, this is a market follower. It's a market stock. It will pull back with the NASDAQ. In fact, it is like this stock and NVIDIA and the whole semiconductor world is the NASDAQ. So definitely highly vulnerable, and I hope that answers your question. Okay, cool, no problem, DJ. QS, QuantumScape, right? Oh, so look at this. This one's been out of play for a long time. I remember we tried getting involved in this one, and I believe it got stopped out. I think that was around here somewhere. Yeah, so something like this is a good one that you bring up, DJ, because it's out of play. Right? The day traders are not paying attention to it. No one's paying attention to it. That's a good thing. See, so Julio's asking about AMD, right? Julio, this is a stock that makes more sense in terms of getting involved in something because no one is paying attention. It's been out of play for a while, okay? But it's not pushing lows either. So this is, I like these consolidations because when they break, eventually at some point, if this thing breaks, you get that squeeze, you get that party, all the day traders piling in, and then it starts to look like AMD. And that's when you want to get out, not when you want to get in, right? So this is in one of those positions. Now, look at the length of the consolidation. And the consolidation is basically, it's a higher low relative to this gigantic move over here. So I do like that portion of it, okay? It's just one big elongated higher low. Now let's look at the more recent price action. So definitely good location. Today's candle is red. You know, after yesterday's little bullish candle, it's just noise at this point. So this when you're in this situation, basically it just becomes about the level. The candles aren't going to be as meaningful when it's consolidating like this. You're going to get a lot of noise, a lot of random price action. So look at the lows. What is the low on this thing? 21.18. So let's just round it to 20. Okay, let's just round it to 20. That's a nice whole number, round number, around $20. So if you're buying this thing right now around $22.64, you're going to risk about $2.50, something like that, and it could go there. But if this thing starts to go, you have a lot of room before you even reach the middle of the range, right? You have this little minor resistance here around 31. So if you're buying it at 22.5, you're risking $2.50, and it goes to 30. That's more than 2-to-1 reward risk, and that even in a move like that, that hasn't even started to move yet. Okay. That's just starting to attract, you know, some day traders that have nothing else better to do or don't know what they're doing, and they start buying it at the worst possible time, you know, near a resistance, right? So the reward risk makes sense in that regard, and if it breaks through that, then you have all this area to run, right? So a lot of reward potential, and you don't have to take a lot of risk. So yeah, I like QS. Definitely like QS. Based on that location. Now keep in mind it's an electric, I believe they're related to the EV sector. I believe it's one of those, so just something to keep in mind. And something that's out of play. It doesn't mean that it's going to break out tomorrow, but usually some news comes out of nowhere, it's up $3 or $4, and next thing you know, everyone starts piling into it, and you're looking to get out, right? That's the idea. That's the position you want to be in. So thanks for bringing this up. I mean, if you're getting involved now, I would say it's aggressive. You could be more conservative and you could wait for maybe a better looking candle or something. But like I said, this game is really all about risk. So if you're willing to take the risk now and it goes straight to your stop, hey, that's the risk you were willing to take. That's what you have to accept. People are all caught up with the charts and the oscillators and precision and this exact signal and blah, 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 blah. All of that stuff just kind of helps get you from 50% to maybe like, you know, more than 50% win rate. People want high win rates, but win rate is not the solution. The reward risk is, okay? Win rate if you ever hear these fakes, these fake gurus with these high win rates, says, "Oh, my system is 95% accurate. Okay, if you buy my system and I'll sell it to you for $1,000, it's 95% win rate." Right. But usually, if you look at those win rates, first of all, they don't give you a good sample of historical data anyway to go by. But usually, they're looking to make like 5 points, but their risk is like 25 points. You can't make money like that, even with the high win rate. Number one, when you pile on, especially if you're trying to manually manage the system. Something like that, in my opinion, is better for a robot because the robot's not emotional. It doesn't care if it has a bunch of losing trades in a row and you're minus 75 points. The robot doesn't care. It's going to take the next trade and the next trade and the next trade, and it doesn't care, right? That's the way you need to be with something like that. And it's impossible for a person to be like that when you have your $5,000 account and it gets cut in half very quickly. You're going to be emotional most of the time, unless you have $1 billion and you don't care about your $5,000 account, right? So that's really the key to the whole thing. All right. So let me see. Good question. Let me see what else I got here. I talk too much. Okay. Hey, Matt, no problem. Matt, thanks for being part of the stream. Thanks for participating. I sold the rest of my position yesterday near 99, but I like the stock long term. What might I look for re-entry? Okay, so I answered that question. Pullbacks to like the lower 90s, and there's nothing wrong with the stock. I mean, the stock is a high quality stock, definitely a leader in its industry, right? AMD is not some garbage altcoin. AMD is a real company that leads their industry, and they make good products and blah blah blah, right? So as an investment, I agree with AMD. What I don't like is the risk of the general location for the market because AMD is a market stock. So great opportunity for like long term for AMD. Let them S&P pull back. When you see that S&P 30% or 15% or 20% off of its high, and AMD is at 60 bucks, that's a good time to be buying AMD for your long term portfolio. But or like Andrew says, you can just buy your little bits and pieces, right? So maybe you're at all-time highs right now, but you like the company. So instead of buying 100 shares, maybe you buy 2 or 3 shares at these levels. And you want to average into something like AMD, dollar cost average, okay, it's AMD. It's not VeChain, okay? So if AMD pulls back to 60, you'll be buying more and more and more throughout that time. But the thing is, you want to make sure you don't get overexposed, even in something like AMD, because markets can do things that are very unexpected. What if AMD goes to 40? I know, I'll be buying it in 2 seconds. Yeah, I'll buy $40. Right, until it's there. I don't know. The whole market, the market is selling. The market's going to be at 0. And this news came out, and that's what everyone was saying back in March of 2020. Right, when the S&P and Nasdaq, everything was pushing those lows. I don't know, the market's not safe. That was the bottom, right? That was the bottom that we're making all-time highs from. So anyway, that's why it helps to have a plan. So I hope that answers your question. I know I get a little dramatic, trying to make it entertaining. I don't have thousands of followers here to entertain, but still, have to have some fun. All right, so let me see. So that answers that one. All right, Julio, what's your thoughts on the? Okay. So that all right, what you're bringing up there, let's bring that up. That is that's basically like, here, we'll go with the index over here. This is kind of like the Dow, right? It's the same idea. And it almost looks like the Dow. Obviously there's 40 companies or whatever in this index. So it's the same deal. And the thing is, whatever the U.S. does, these things are going to follow. Look at this chart. If we go back to our S&P chart, and we go back, look, what did I just say? March of 2020, right? Was the low. The S&P and Nasdaq charts look just like this. So these things are following the stimulus, the path of stimulus, all the free money that they pumped into the markets since that time. So that's what you're dealing with here. So here's the thing. The trend is clearly bullish. Can't argue with it. But you're at these highs, which are vulnerable. So I wouldn't be going nuts chasing these things. I wouldn't, also, you have to be very careful shorting. I'd love to short the NASDAQ, okay? We don't short Bitcoin, but hey, I'll short anything else. And it's a very, very hard short. We've tried a few positions in the NASDAQ, and they haven't worked out very well for the most part. And I still have my SQQQ. Since it's January, I'm just going to hold on to it. But the point is, you have this area here. It's a tough spot. So if you're going to get involved in this thing, at this point, it makes sense to look for longs, but not at this level, not at this price. You want to see this thing pull back to a support. Right now, this is your minor support at, what is that, 63.04, around there. That's your support. So, and that's going to coincide with, like, what was that on the S&P? Because again, it's the S&P that's driving the world here. It's going to coincide with this level on the S&P, right? 42.31. So that's what you want to keep an eye on. When these markets go back to these supports, I'm going to be very curious to see how they behave. It's likely we get a bounce off of there for a possible head and shoulders. How long can that take to develop? That could take the whole month of August, believe it or not, to develop a right shoulder over here. Okay, it's possible. Or it could keep going higher. I don't know. But we can argue that the trend is still bullish, but you're at a highly vulnerable location. So that goes the same for this index as well. All right, so I'd be looking for something like that, and that's going to coincide with all the stocks that are affected by this index. The European stocks or whatever companies, the ones that are in the index because they're obviously following, and they make up the index, or stocks that are in this part of the world. Okay, I believe is this the French index? Forgive me, I should know that. Okay, anyway, so thanks for asking about that. Now let's see, AMD at 84.50 on June 24th. Oh, see, all right, so that was the swing trade that Andrew called out on June 24th. AMD at 84.50. And T3 was at 96. Okay, thank you. So that was the swing trade idea. I mean, that wasn't mine. That's why I don't know the numbers. It was his. But yeah. So that's when you wanted to get involved in something. If you're going to take a chance, that's the time. And even though I thought that was risky too. I thought that was pretty risky. Boy, was I wrong, DJ. Okay, Alice, we have position 85 as well, 30% gain. Wow. No, that was right. So Alice is talking about the position trade, right? Because we also have position trades, and sometimes the same stock can be a swing trade or a position trade, but they're treated as two separate positions, right? Two separate types of trade. Okay, cool. Alex, please take a look at Dodo. What is that? Okay, let's take a look. I hope this is not one of those. We had a guy in the chat the other day. Okay, this isn't. We had a guy come in the chat the other day, and he gave me this one about Elon. And yeah, I was like, he was like that bad kid in the class that tricks the teacher into saying something stupid and everyone laughs. He got me. Anyway, all right, so it's not one of those. Now, this is obviously an altcoin, right? And looks like recent price action, right? You had this range back here. This is not exactly the best looking chart in terms of trend because you have a lower high, you have another lower high over here, right? Now, and it's tried to push lows, but it may be changing. So here's the thing. You have to look at what carries more weight. Now, first of all, Bitcoin is the leader, right? And we're going to have to assume Bitcoin is the leader, even though this thing has been just kind of going lower anyway on its own. You're trying to take out the high over here. So this, I could see why this may look exciting, or maybe there's some hype about it or something. But the conservative thing to do is to let the structure change first before doing anything. You can argue that there's a double bottom, okay? That's good, but a double bottom by itself is not really that good in the context of a broader trend that's not exactly bullish, right? So maybe it's changing, maybe it's consolidating, maybe you want to argue it's a triple bottom because it made this low back here too, all right, and it's trying not to go lower. That's fine, but look at the resistance levels. It's also not going higher. And a weak market respects resistance levels. So far, it's respecting them. So, and the support is more likely to break here if this resistance stays intact. That's why I say, let the resistance break first. So what? You're going to miss that. But the next pullback after that is then a more sensible time to get involved in something like this, because at least it's proven that it's no longer weak. Okay, it's changing at that point. At this point, we don't know. It may hold that resistance again, and it may go lower. So why get involved in something? It's not like this is a great looking chart like, you know, like AMD or something, which is on all-time highs. The thing has been generally strong all along. There's many other coins and things like that that have been generally strong. Not coins, but a lot of stocks. They've been generally strong. This has not been generally strong. So just something to keep in mind there. All right, you don't want to get caught in something that everyone's like, oh, maybe it'll play catch up, and it doesn't. All right, so that's what I'd say. Now, how much is this thing? All right, it's hold on, I'm trying to read the price. Is it $1.15? Okay, is it $1.15 right now? Okay, so I mean it's a relatively cheap coin. I mean, if you want to throw some money in and hope for the best, you could play that game too. I mean, most of these are a gamble anyway. These altcoins are very similar to penny stocks. So your risk obviously will be defined by this low, okay, which is 75 cents. So it really shouldn't go below that. And if it does, you really should be out of it, because that would be the lower low, and it may go, it's likely to go lower rather than a failed low, because there's nothing that says that this thing is breaking resistance levels. All right, so something to keep in mind there. A lot of people, they get involved in these altcoins, and the altcoin goes against them, and they say, oh, it'll come back. Oh, yeah. I watched my favorite guru on YouTube, and he said just to hold on because it'll come back because they have some news coming out and blah 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 blah. Right? Don't get caught in that. If it goes to where it shouldn't go, take the loss, get out. Take the loss. The smaller loss, the better. All right, so let's see what else we got here. Thanks for asking about that one. Okay, cool. Oh, Alice was on vacation. Okay, hey, Kim. CLOV, is that a stock or is that a coin? Let's see. That's, oh, Clover. I'm guessing that that's a stock. Is there a coin? Let me just see. No. Okay, so it's a stock. All right, now talk about, so this thing obviously had hype in it not too long ago. I mean, I could tell by this, whatever that is. And since then, the party's over, right? Lower highs, lower lows. Now, what about where this thing is right now? So it's out of play, kind of like QS. It just hasn't spent as much time in the consolidation. Time is an important thing. It's important when it comes to consolidations. You want this thing to spend a lot of time, because usually that means a lot of people, often a larger portion of the trader population is half of that population is going to be on the wrong side. And the more time that you have in it means the larger the population will be. And when there's a squeeze, half of those people are going to be forced out. That's why you get these crazy moves, on top of it popping up on all the day trader radars and everyone piling in. Okay, so I like the general location. I don't like the fact that it's not taking out resistance levels, lower high, right? You have this lower high here. What is this? 945. So you figure that's about $10. Needs to clear $10 to really get going. But again, it may be in a range for a little while here, right? What you don't want this thing to do is take out 792, or basically you want to give it a little room, $7.50. If it does that, then you just want to step aside, okay? So the conservative thing, you can wait for that breakout to see if it starts to go. But like I said before, there's not enough time here, right? So it would help if this thing would consolidate for maybe another month, and you'll maybe have a much better potential of this thing going somewhere again. Obviously, some news can come out, whatever, but there's really no reason at this moment to do anything with this thing, because it can still go lower and it hasn't changed its structure yet. All right, so I hope that helps. If anything, you're not buying the high, all right, but it can go lower. So something to keep in mind. Sometimes with these things, again, you know, this is a less expensive stock. It's really about how much risk you're willing to take. Like DJ said earlier, he wanted to know if it'd be worthwhile to throw a couple $100 at some of those stocks that he mentioned. And sometimes it's a gamble like that, right? No matter how many charts you look at, no matter how many time frames, no matter how many oscillators, none of that really matters. It just matters how much you're willing to risk. And if it knocks you out, well, that was the risk you're willing to take. A lot of times, that's what it's about, okay? again, a lot of these people that make these, you hear about these people, oh, he made $1 million, and man, I wish I had his insight. There was no insight. He just threw a little bit of money into this, and it just happened to go real big, and he wasn't smart enough to get out, because usually the more you know, then the more pain that you've taken, the faster you want to get out of stuff, because you're just so happy to get the money, because you know what can go wrong. People that don't know, they hold because they don't know. No, yeah, this is easy. This is so easy. Just let it run. Yeah, yeah. But when they lose a lot of money and then they find out what can go wrong, that's when you start to become more conservative. Okay? So that's a lot of these people that made all this big money, they were lottery tickets and they just didn't know enough to get out. Right? And the market happened to be very forgiving. And I described that situation because this could be one of those. This is not this is not like a solid market stock that dominates their industry and has a great product like an AMD type thing. Okay, so thanks for asking about Clover. Oh no, I know they're health insurance or whatever they are, but obviously they're not doing very well in terms of other insurance companies. So let's see what else we got. Thanks for asking. Jenny Jr. Hey, good to see you. If BTC were to retrace to the middle of the range, would you wait for a double bottom near that region before entering? Okay, that's a good question. Upon confirmation without a double bottom. Okay, so let's go back to Bitcoin. That's a good question. Well, that's, first of all, I mean, for our swing trade strategy, I want to see that midpoint. For one, we have a lot of reasons for the market to reverse there. I mean, there's a lot of price action, a lot of midpoint action in there, right? So that's why I would anticipate something like that. So to answer your question, as far as waiting for a double bottom, in this instance, I would not wait for a double bottom, okay? It would be nice, but if I saw a bullish pin bar or a bullish inside bar, okay, now, of course, I'd want to see the pullback should not be one candle, right? If I see a pullback that looks like this, one candle, and it just pulls back and in one day and it goes right like that, then yeah, I'd want to see some stability, because a large candle like that is often a sign of momentum, and I'm not going to step in front of that. But if the pullback is more orderly, kind of like this, where you get like a little pullback, a little hesitation, a little pullback, a little hesitation, blah, 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 right? I'd be more willing to take a single candle, not wait for the double bottom. All right, so I hope that answers your question there, because again, that would tell me that the momentum isn't so harsh pulling back, and I'd be willing to give that a try on less confirmation. If you're more conservative and you want to wait for the double bottom, okay, but you may not get it, right? And that's the thing you have to consider. You may not get the double bottom in the middle of the range. All right, so thanks for asking. It's a good question. Okay, Alice, any good trades? Oh, DJ's full of good trades. Yeah, those Indian stocks he just showed us, man, you should share them. We should have just an Indian chat, and DJ could just be like in the Indian chat room, and he can just put Indian stocks in there. All right, let's see, DJ. Okay, so so DJ says, I don't have 1 million followers, but I do have some loyal followers. I appreciate that. I mean, Alice and DJ and some of these people have been following me for a few years here, so I do appreciate that. Let's look at the chart. Tidewater, oil. Okay. Yeah, the stuff that's going on is nuts there. I remember that too. Wouldn't do this. Alex is talking about the Elon coin. No, okay, no problem. Okay, Clove was a Robinhood favorite. Oh, okay, good to know, DJ. Good to know. All right, Robinhood favorite. That's right there is a red flag. All right, I mean, anything that's a Robinhood favorite, you definitely need to think contrarian on. But it could be in your favor if you're in early and it starts to go, because those are the people that are going to help you get out, are the reactive Robinhood people. Okay, Shubham, good to see you. Shubham, you missed all the Indian stocks. We had all these Indian stocks that we went over at the beginning of the chat that DJ had, and you missed it. I think Shubham is located in India. So anyway, okay, cool. Okay, no problem. Great trade, DJ. Right. Yeah, we have an Indian chat room. Gold. So, Chubbaham, I went over gold. Hey, HS, good to see you. I went over gold earlier in the stream. If you just rewind back about 15 minutes into the stream, I covered gold. Clearly, gold is going higher. We had the higher low yesterday, and it's on its way. As long as the dollar keeps selling off like it's doing at the moment, can't chase it though, right? So if you're not in from yesterday's candle here, and that's a swing trade that we should have sent out. I mean, I have to apologize for that because we saw it yesterday while we were talking about it, and right here. So that's a long. It's long. You can't chase this now. If you go for the breakout, like I said, the risk is very high. But I mean, gold has been generally strong, and now we have this solid higher low in place. So for gold, I would just wait to see if we can get another pullback of some kind, or maybe on gold we get a mini, like a continuation pattern. Maybe we get like an inside bar or something, trend momentum continuation pattern. I'd be open to something like that since gold has been generally so strong. I mean, maybe with this solid higher low in place, maybe this is the leg to 2000 again. I don't know. But, you know, I also thought that up here when I sent out that swing trade up in here, and it got stopped out like the next day. Okay. And it went 170 points or 150 points lower after we got stopped out. So I always, do I have the trade on here? Oh, there's the trade. Right. I keep that trade on here as a reminder. 1899.5, and it went to like 1774. So that's why you can't get overly aggressive or think, oh yeah, I got this. Yeah, I know where gold is going. That's easy. No. Okay, anyway. All right, so I'm going to be wrapping this up here soon. Just a couple more minutes. And again, I appreciate everyone's questions. Let me see what else I got here. XRP is waiting for a lawsuit. Okay, Alice is talking about. Let me see. Hold on. I'm selling it here. I have some information. It's going back to 1800. Oh, you're selling gold here? Well, look, Shubham, if you have it from a good price, nothing wrong with locking in a profit. Okay, nothing wrong with that. I would just say though, at this moment, I mean, we just got a buy signal, you know, at the bottom of this candle, so there's no reason to sell right now based on the momentum here that I see. Yeah, but if you want to lock in profit, like again, not going to stop you from locking in profit, but if I was in this thing, I would just let it ride to see until it gave me some kind of reason to sell. Okay, but anyway, thanks for mentioning. I saw another one in here, another XRP. So let's see, XRP. Haven't heard from this one in a while. So there, look again. Well, XRP is a Bitcoin follower. It's always been a Bitcoin follower. In fact, look at this. Look at this double bottom situation right here. Does that not look almost exactly like Bitcoin? Look at this. This is not a coincidence. All right, that almost looks exactly like the consolidation and reversal that we saw in Bitcoin. And just like Bitcoin is flirting with 3940K, right, which is the range high, this thing is flirting with what, the 70-cent area, which is the coincident range high. So it's the same deal. Okay, same deal with XRP. I don't like this coin, but I wouldn't go long here. This could be a potential breakout if this red candle does not follow through and it just turns into this little mini thing here, this little mini inside bar, and Bitcoin does the same thing and Bitcoin starts to push higher. This will probably do the same thing. Okay, so the only place that I can see here to measure risk from is this range low, which is 51 cents at this time. You know, if you want to go by this little mini higher low in here, but that's in the middle of the range, you're looking at basically 60 cents. But that's the midpoint of the range. You're likely to get stopped out there, right? It can easily touch the middle of the range again. And that's, in fact, that's the buy that I'm looking for on Bitcoin. That's the buy area. So that's what I have to say about XRP. I hope you find that helpful. Let me see what else I got here. Okay, no problem. So, let's see. I'm selling it here. Okay, Alice, it's so easy to see after the fact. All this TA is so easy to see after the fact. Yeah, no, sure. And the idea, again, of course, is to see what kind of clues we can gather to anticipate what's likely to happen next. Again, half of the, or I should say more than half of our problem, really the chart is being able to anticipate what's ahead, or being able to see what's not on the chart. Okay? And that's really where I try to focus everyone's attention. What we can't see. That's the Bitcoin pullback to 35K. It's not on the chart. We can't see it. But there's a potential area where buyers can step in, where buying activity can occur. That's a plan. Okay? Something that's not obvious now. Obviously, I can't react to it. It's not there. But if things go there and it lines up, now I have a plan. Right? That's really the mentality you have to have. Not going backwards. Everyone looks backwards because they go by what you can see. And a chart is old. Even if you're looking at a 1-minute chart or a smaller time frame, a 15-second chart or whatever, that's old information. It's 2 orders that were matched, and it is now part of history. We can't see the next 2 orders that are going to be matched because we can't see the real order books. We can't see the real players in the market and their accounts and how much money they have and how big their positions are. That would give us a much better idea of what is likely to happen next, and we can't see that. So we have to guess. Okay? What percentage of your knowledge comes from your CMT certification versus trial and error? That's a good question. So a lot of my basic knowledge, about order flow and about how markets work, like microstructure, a lot of stuff that these fake gurus won't talk about because they don't know it, that comes from the CMT. And also like Elliott wave and all that kind of stuff, a lot of that comes from the CMT as well. But the CMT, again, people think that just because, I thought just because I have a professional designation that people would just come to my YouTube channel and, oh, this guy must know it. No one cares about my CMT. Okay, it does not matter because people would rather watch a guy, thousands of people would rather watch a guy who just started trading a year ago because he tells a better story or whatever. And they could care less about my CMT or that I've been in this for more than 20 years. None of that matters. Means nothing. If I can't tell a good story or tell people what they want to hear and deliver that message of hope and dreams, then I get no views, right? That's the economics of entertainment or viewership or whatever you want to call it. Okay, so that's the way it is. Back in my day, in order to be like an educator or someone of authority, you had to have some sort of background or come from a good school or something of credibility. You had to have something. Today, anyone can just jump on the YouTube channel and, hey, I'm a trader, and I'm a trader just like you, and I'm going to show you how to make 5 pips in 2 minutes, and blah, 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 right? It's amazing to me. But people, there's, and I'm sitting here like arguing with the logic, but there's no logic. It's really emotionally driven. That's the whole thing, just like the market, right? Why do all these people follow someone who's probably less experienced or just as unknowledgeable or just at the same level as them? Because they need hope, right? And hope is an emotional need. Has nothing to do with charts. They need hope. So they want someone to tell them, look, I'm going to show you this secret. I'm going to show you how to make money like this. I'm going to show you how to turn $100 into $100,000 in 5 minutes. That's what they want. They don't care if you can actually do it or not. They just want to hear it, right? Anyway, that's what I've learned from watching these YouTube videos. All right, so good question. Don't get me started on the CMT because I'll rant about that forever and you don't want to hear about it. All right, Shubham, this week in August futures contract rollover, so this business is because of it, okay? Oh, because of the gold thing? Okay, all right, it's possible. Probability is what we're looking for. Yes, DJ, right. It's all about probability, and probability is something you can't see. It's something that you have to gauge, and it's not going to be precise either, because then you get a mathematician with their normal distribution curve, and they'll say, well, how do you, what percentage of... It's not that precise. I'm sure there's someone that can get some sort of precision, but you have to be like an engineer, right? And even then, it's those guys, the smartest guys in this business, they're not messing around with charts, right? If you ever research like these algo guys and this and that, they're not sitting there trying to program a robot to trade patterns, and they're trying to make programs that can compete for speed and be the first in the order queue. That's what they're building, okay? Those are the smartest guys in the business. They're not messing with charts. So just so you know. All right. Okay, so let's see. What's better, Elliott wave analysis or cycle? Elliott wave. Cycle analysis, I've experimented with all that because, again, as a CMT, you're exposed to all that stuff. Cycle analysis is just as random as everything else. All right, you say, oh, look, if you line up two lows together, right, and then the cadence or the what do you call it? You know, you line up two lows, right? This low and this low, and then based on that period, we should get another low around the same period, right? That's basically cycle analysis. Yeah, doesn't work. Okay, it's completely random. Not only that, it can give you opinions that can really throw you off, right? So Elliott wave is based more on the patterns that develop from human emotion, right? So Elliott wave is actually much more effective. You just have to understand its limitations and understand how to apply it in a way that won't be confusing, because the big conflict with Elliott wave is the subjective nature of it. And you get people, oh, this is a wave 5 of this, and this is a wave 3 of that, and this is a corrective blah, 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 right? And it can be very confusing. That's what you need to avoid. Right? And you really have to stick to like the broader time frames, kind of like looking at larger time frame charts. But anyway, yeah, I would say Elliott wave, definitely. Okay, I think algo trading has changed things, Shubham. Well, it has in a lot of ways. They say, well, you know, it's brought a lot of liquidity to the market and this and that, and it makes markets more stable. I don't know about that. They've taken a lot of opportunity away for smaller time frame traders. That's for sure, because all that money that was there is now, there's a lot more competition for it. Back in my day, when I started, although algos were, they existed, they were a minority back in those days. So, and also markets were priced differently, and the microstructure was different. So we actually had, one of the advantages that we had where I worked was a speed advantage compared to like your point and click typical average trader back in those days. That advantage equated to a lot of money. Okay, we don't have that advantage anymore. The only advantage we have today as a retail trader really is trend. That's it. That's all we got now. So you have to truly understand the you know, what makes a market work, how to really define a trend, and then on top of all that, you know, you have to have more control over yourself. Really is what it comes to, because we could sit here and we can bang our heads on charts all day long and it doesn't mean anything, because the charts don't provide any true advantage. Okay, a true advantage in the market. You just have to find things that maybe will get you over 50%, and from there, what's going to make you the money is the reward risk, not your signal, not your trade signal. All right, so very, very important thing. A lot of people miss that. Okay, so anyway, you have to lie, deceive for viewers. You are sincere, and that's why you're long. Well, no, I appreciate that. Well, I know. I mean, Alice is right. He says you have to lie and deceive viewers. That's true. That's why I call them fakes. There's so many of them. And, you know, I'm sitting there, I'm watching, and like within minutes, I can tell you if a guy's a fake or not, you know, and most of them are. I haven't come across too many that I could say, okay, this guy actually has experience. I haven't come across too many of real guys. Because you know what? Those guys that have a lot of experience, they're not going to teach. Because, for one, maybe they don't want to teach. They don't have to teach, right? And why are they going to share their special strategy? They're not going to do that. They're making money with it, right? They're not going to do that. So anyway, so I rarely come across a guy that's been doing this a really, really long time, giving away very specific strategy information. Okay, so thanks for mentioning. 1 hour and 36 minutes. I know. DJ's keeping. See, DJ is my independent fact checker. Usually he corrects me when I spread fake news, but today, you know, he's keeping an eye on my talking, and I am talking too long. I agree. I can feel it. you should start a mentor program. I would be the first one to sign. Well, thank you, Alice. In fact, actually, though, Alice, you wouldn't need my mentor program because you've actually gotten all that information from being a member for so long. You actually, I don't think you would. I think you're there, like you and DJ and a few other people that have been following us a long time. I mean, I think you guys are pretty good. You know, especially when you share your trades and stuff, and I see the stuff that you're doing. Yeah, it's like, wow, okay, yeah. So I think you're there. Anyway, thanks. I appreciate that, though. Thank you for the compliment. There's so many ways to analyze, right? And yeah, like I said, DJ, you guys have graduated. So you know, I don't know. I wouldn't let you into the mentor program. How about that? Because I would say you guys don't need it. Anyway. All right, so I'm going to wrap this up, you guys, because I'm talking too long now, and I have to stop talking. So I want to thank you all for spending some time with me here this afternoon, asking some great questions, and you know, just getting some perspective on things here. So I appreciate all the kind words. If you want to know more about Greenbridge, if you're new, you can see the links below the video here. Again, this is a slow time. The summertime is a slow time. I've only learned 10% of what I teach. Well, yeah, I don't know what to tell you there, DJ, but with that 10%, you could do a lot. So, you know, but again, if you're new, this is a slow time, especially for swing trades. So I don't want, you know, I see some people, they come to our chat, right? Some new people, and then they cancel the thing. This is not a good time to be coming because there's not a lot of stuff to do right now, right? And we're not going to force trades, and we're not going to just trade just for the sake of trading, especially in such a highly risky location, right? Some people do that because they don't care, but I don't want to get people caught up in all this stuff that is completely unnecessary to take all this risk. So if you're new and you want to get involved in stuff, I want you to understand what you're getting into, or maybe just wait like a month and then check it out or something, and just come to the free things until, you know, until things start to pick up, because maybe it'll be a better experience for you. You know, my concern is I want you to have a good experience. I want everyone to have a good experience, and it's not always easy to deliver a good experience. All right. So anyway, just wanted to mention that. Anyway, on Mondays I simulcast on TradingView, and I'm on here, so you can, you know, check out that. Make sure you subscribe to the channel here. Other than that, everyone enjoy the rest of the day, the rest of the evening, wherever you are in the world. And thank you very, very much for watching.